I think there's something to be said for timing as well. I think that one of the things that we've seen over the course of the last 3 or 4 months with Powell is that he's very much understands that the market is looking for prescriptive timing. And so he was not able to provide that. He said, of course it can continue, which is a positive. To Joe's point, they're going to help it continue. However, I think, we don't want to read in too much to this, that this is a 3, 4, 5-year additional expansion. I think the reality is that if you look over the next 12 months or so, notwithstanding Powell's comments, economic data isn't pointing to a recession in the next 12 months. You look at leading economic indicators where the evidence is in the market that we're not bracing for that. And so I'm not reading too much into the fact that, he's saying that the economic expansion can continue, because it's likely to continue this year. And I don't think that that's a surprise.
You know what I didn't get from him, Sarat, is I didn't get any sort of these grave concerns that while China and Europe are showing weakness, that this is going to be a tidal wave washing over onto the U.S. shores and going to kill the expansion here. It's going to kill the stock market and everything else. In fact, I took it almost the exact opposite of that.
Yeah, I think what he's trying to say is, look, the fundamentals are still okay here. We're not going into this deep recession that the market kind of said in December. Wages are still strong. Like you said, leading indicators are still consistent with a growing economy. It might not be 3% or 3.5%, but it's 1.5% to 2%, and that's still strong enough for us to have an economy that's growing.
So let's talk about where the market is today, okay? Transports are still an issue. The Russell is still an issue. Mike Wilson of Morgan Stanley is going to be on this desk tomorrow. The guy who nailed the bear market in the winter. Okay, is going to be back. He's out with a new note today. Almost a reality check, if you want to take it as that. Evidence building for further slowing. The evidence grows that the forecasts have more downside risk. That's to earnings. Don't trust the strong rally on bad results in the fourth quarter. Correction not over until margin pressure stabilize, which means defensives are likely to resume their leadership. It almost flies in the face of trying to take the other side and put a positive spin on what the Fed chair said and what investors seem to be willing to want to do in this market.
Yeah, and we talk about the Fed put. A put is a defensive, it puts a floor in on the markets. And I think that's the right way to look at where the markets are right now. And it's not just the Fed, obviously. The ECB and China's regulators and central bank are trying to ease as well. So everybody's got the put in there, but that doesn't tell you how we get higher from here. Mike Wilson could be right, but I think it's more likely that what we see here is some resolution of the China trade issue. I know there is less certainty on that today than there was a week ago, but I'm still presuming that rational heads will prevail and a deal will be struck. I'm hopeful, and this might be hoping too far, that immediately after we get a deal with the EU so that we don't have auto tariffs and a continuation of the metal tariffs in effect there. Because if you get those two clouds cleared up, then you can build on the Fed put, which, Scott, you've often referred to as a foundation. Then you can build the house on top of that foundation, which takes the form of markets going higher. But if you don't clear the trade issues, you're not going to go higher from here.
I just want to throw a little cold water on the optimism.
Go ahead.
Which is, Powell talked about this, the headwinds from Europe and China. I know two things. The first is that the Fed does not know the extent to which global weakness is going to hurt the United States. The other thing we don't know, and this is something you've picked up on, Scott, and I've seen more and more work on this, the extent to which the tariffs themselves have caused companies to redirect their supply chains and created deadweight losses in the economy as a result. I saw a study that suggests $165 billion worth of trade is looking for a new route, another Silk route, in order to avoid the existing tariffs in place. I think those are two wild cards out there. Plus, Morgan Stanley had another note today, which, by the way, this was pretty uniform across the board when it came to the jobs report on Friday. Ignoring the top line number, which was so very weak, and looking at the wage number and pointing out the margin pressure on companies, saying the only way that this ends up, you either end up with an inflation problem, which is companies passing along higher wages, or two, you end up with a margin problem because the money has to come from somewhere.
Mike Wilson is already saying you have a margin problem, and until you get the margin pressures to ease, you can't get out of a danger zone.
I can't let Steve get away with that because he's not giving any credit to productivity. It saves you all over the place when you start to bring it back. The Silk Route, for example. You have now manufacturing moving in clothing and hardware manufacturing to Vietnam. Even though there's a trade deal announced tomorrow morning, that's going to remain there, and you're going to get a competitive analysis going on saying, do I stay in Vietnam or go back to China? It actually helps on margins.
May I respond?
And productivity.
Well,
First of all, you're
Let
absolutely
him
right
finish.
about productivity. Productivity can offset this if it's there. Secondly, however, you tell me, you're a vice president of overseas operations. If you want to be spending your time finding another supplier in Vietnam, or you want to be spending your time creating a new product and enhancing productivity?
I've got 50 companies making stuff in China.
And how much time are you spending to get rid of the 25%?
No, I started moving long before trade wars because Vietnam was cheaper.
Right.
I make those little Love Pop cards in Vietnam, not in China anymore. Big laser cutting facilities in Vietnam.
And there's a lot of it out there, Kevin, that's still looking for a home.
I'm very much more optimistic than you are.